In this video, I'm going to teach you guys how to read market structure. Market structure is the fundamental of trading. If you can't read market structure, you will not be able to tell the market direction. You will not be able to spot reversals, uptrend, or bearish trends. And if you can't do that, you can be put off the market. I believe everybody knows that we trade according to the market trend. If the market is going up, we do what we buy, and if the market is going down, we do what we sell. So in this video, I'm going to explain all of these things for you. And by the end of this video, you should be able to tell the market structure, you're able to use market structure. So for the basics, I'm going to start with the basics. The basics is that you should be able to tell uptrend or downtrend. So how can you tell if a market is in an uptrend or in a bullish movement, in a bullish trend? If you see the market makes series of higher highs and higher low, I'm going to explain this to you. See, market creates a high that goes up, then comes down and goes up again. So that the market is what is in a uptrend or is in a bullish trend. But higher highs and higher lows, I mean, as you can see at this particular place. What do I mean by higher highs and higher low? As you can see at this particular place, this right here is an high, and this right here is an high. As you can see, this particular high is higher than this previous high. And if you check, this place right here is a low, and this right here is a low, and this right here is a low. If you look carefully, see that this particular low is lower than this low. You get, or this low is higher than this previous low, and this low is higher than the previous low. Because of that, this is called series of lower highs because the low is still high. Yet lower highs, and this is called higher highs and higher highs. So the next time you see a trend that is going upward in this direction, come on with staircase, a case that is going upward. You can see up, then down, then it creates on that high that breaks this previous high or that is higher than this previous high. And the market is what is in an up trend or a bullish trend. Get, also, if you see that price is going down like this, you get, it's going down in this direction. In the market we are in a downtrend, and this is called making sense of lower lows and lower high. If you check very well, this this right here is a low, and this low is lower than this low I can see in this place. And this low is also lower than this particular low. This is what we call lower low, series of lower lows. The here is called lower high. You get, lower high. It is called lower high because this high is lower than the previous high, and this other one is lower than the previous high. You get. So if you see structures like this, series of lower lows and lower highs, so that we are in a downtrend. Now, if we are in an uptrend, there is something called break of structure. Break of structure simply means that this particular, okay, before I talk about break of structure, you agree with me that market does not go up, price movement, price does not, if we're in an uptrend, price does not just go up straight, you get, in a straight line. No, there will always be what? An upward movement, then kind of a pullback, on that upward movement, a pullback, and another upward movement again. This upward this upward movement is called impulse. You get, impulse, and this particular kind of backward movement is called retracement, and here is called upward movement, retracement, upward movement. You get, the upward movement is called impulse movement. Why this particular one that comes down is called retracement or correction. So if we're in an uptrend, we see upward movement, you get, which we call impulsive movement, then we need to see a retracement or correction. Under impulse movement again, a correction or retracement under impulse movement again. You get, so this impulse movement always goes higher above the previous high. You get, so if you can see on this place, this particular uh this particular impulsive move, breaks above the previous high, and because it's called break of structure to the upside. And if we check, this particular impulse movement also goes above this previous high, and this is called what? Break of structure to the upside. If you also look at this, you can see there's a break of structure to the upside, and here there's also called break of structure to the upside. So you are seeing this, that the impulsive movement you get is breaking straight, breaking the previous highs. It is called what? It shows that we are in an uptrend on a bullish market. If you're looking to buy, if you're looking for opportunities to buy. While in a downtrend, it is still the same. You get, if price is going downward, price does not go downward in a straight line. No, price goes downward. You see an impulsive movement to the downside, then retracement or correction. On that impulsive movement to the downside, retracement or correction, another impulsive movement to the downside. This is how it works too. And also, there's also break of structure. Anytime, since when you downside, market making sense of lower lows, you get. Anytime this low, you get, goes below the previous low, it is called break of structure to the downside. And also, on this particular place, there's another break of structure to the downside, we call break of structure. On this, we're going to mark our break of structure from here to break of structure, and this is break of structure to the downside. Now, let's talk about reversals. If we see, for example, we are in an uptrend, the market is making series of higher highs, higher low, higher highs, higher low, higher highs, and then suddenly market starts with faces downward, it gets doing correction movement and goes what? And goes below this previous low, you get. This right here, you agree with me that this is our higher low, higher high, higher low, higher high, then higher low, higher high. If price comes and goes below our previous higher low, you get, it shows that market is changing direction from being in an uptrend to a downtrend. You get. So if price goes below our previous higher low, it means that we are now in a downtrend. You get, and this is called change of character. Change of character. Change of character says that we are going in an upward movement before, but now it's a changing direction to a downward trend. It's called change of character. So in this place, you should expect price to do what? To retraces backward and then create another higher low, then continue this movement to the downside. This is how it should be. Also, for a bearish movement or a downward trend, if market price was going down, make a series of higher lows and higher lows and higher high, then suddenly you see price do what? Goes above, goes below what? Our previous higher, our previous lower high, which is this one right here, and goes above it. Know that market has changed structure to the upside, and this place is what we call what? Our change of character. This will be our change of character to the upside gate. So please don't understand. Let me just draw this out for you. This is what? Lower low, lower high, lower low, lower high. The increase on that lower and lower gate. But suddenly we see price do what? Breaks above our previous lower high gate. This is called change of character. This shows how market is not in a downtrend, but rather in an uptrend. If you understand this, please to like and drop a comment in the comment section. Next, we'll be going to the chart to show you this. But before we get into the chart, I want you to know that if in the chart it will not be very clear. You saw when I was drawing it, I think it was very clear. You could see, you can easily point out the higher highs and higher low and the lower lows. You get easily here as you're seeing on the screen. But in the chart, it will not be very clear like this. Probably this art is gonna look like on the chart. So in the chart, in an uptrend, it might see something like higher high, then higher low, then other higher high, then something like consolidation. You might see a lot of consolidation here before probably finally it will now break structure to the upside. Then you can probably see a lot of consolidation to a lot of consolidation. Finally, now break structure to the upside. So in this kind of scenario, you get if you know that your let's mark the higher highs at first and higher low. You know that this place right obviously is our higher low and here is our higher high. So our next higher low will be this place, right? You agree with me? Here will be our higher low and here will be our higher high. So here is our higher low. Why is here our higher low? Because as you can see, right, it was at this place after a break of structure before you can point the next higher low. This was our higher low. Then and this place was a break of structure to the upside. You get so this was the lowest point it went to before the break of structure. This means that this is our higher low. And on this place, right, there's on this place, this was our higher high. And there was a break of structure to sorry, there was a break of structure to the upside. You get so which means that this was the lowest point it went to before the break of structure. This means this is our higher low. And here is our higher high. Then this, I think this was the lowest point it went to before the break of structure upside, which makes so this is it. So which makes here our next what? Which makes here our next higher low. You get this I can look like in the chart. You get it's not going to follow straight pattern, but if you always be able to point the lowest point it went to, you get. So in this kind of scenario, we are in an uptrend, you get. As long as price did not break to the previous higher low, it means that we're an uptrend. If price consolidate, come to this same exact place, this same place you get, and goes up again, we're still in an uptrend. But the moment price consolidate and breaks below this previous swing low right here, the most recent one, this higher low, it seems that we are now in a downtrend. But the same rule also applies for what? Also applies for downtrend. In downtrend, most likely you also see price go at this lower low. Then you might see a lot of consolidation before price finally breaks below it. There's a lot of consolidation before price breaks below it. Again, as long as price not go below this previous lower high, we are still in a downtrend. But the moment price consolidate and breaks above it, we're no longer in a downtrend, but we're now in an uptrend. I believe this is clear. So now I'm going to open up the chart so that we can see this in the chart. So I think I've opened up the chart. So this is LUSDT. But okay, it works. This method works in all the charts. So as you can see right that let me zoom this so that we can see this clearly. So we're going to start from this particular place. You get so let's draw it together. You can see, let's start from as you can see right. This was our lower. Let's say this was our high. We don't know what it is here, but our lower high. And as you can see, price went to this particular place. You get lower low. Then it went to this high, what we call lower high, and from then there was no break of structure. The only time there was break of structure was around this place when price moved down to this particular place. You can see it went below our previous low, which was at this particular place. So you can see there was a break of structure to the downside. So you can see that we are in a down trend. Agreed? So now, while we were at this particular place, you can see that there was a what? A pullback to this particular place. There was a pullback to this particular place. You get pull back to this particular place, which creates what? A lower high. And then there was a break of structure. You know what I mean? At this particular place, there was a break of structure to the downside at this place. You get which shows that we are still in a down trend. But as you guys can see, there was a this retracement breaks above this previous what? This our previous lower high as at this place can see and this place. Let me show you guys. You can see this was a previous lower high. No, sorry. This was the previous lower high. I forgot that. This was the previous lower high, right? And as you can see, we broke above it. You get nearly we broke above it. What now happens? Price came, create another lower low at this place, and then started trending upward. You get. So at this place is when we have our change of character node. So at this place we have our change of character to the upside, and you can call here week of to the upside, and then price started trending upward. So in our upper movement, consider from this higher high, then price creates an higher high, then higher low, higher high, higher low. So as you can see, as price creates high high, there's always break of structure to the upside. Price breaking above the previous what? The previous higher highs, and as you can see. So and then we get to this place where price is still consolidating. You can see price create this particular high at this place. You get price is consolidating around this place. You get just like I said, until price goes above, price creates a new high. If you understand the market structure, you understand that. Let me move this. So that price create a new high at this place. You get and this particular place is a new high that price create at this place, which is this, right? So price has not broke above this place, and price is still consolidating along this particular place. You get immediately price if price broke below this place, right? If price close below this place, yeah, so it's still at the same level in this place. But if price goes up, we're still in an uptrend again. But the moment price breaks above, breaks below it, then retraces and creates another one. Do that. We're not in a down to another guy in an uptrend. So guys, these are price. These are we read market structure. If it is clear, let me know in the comments. If you have any question, you were to ask me. Now I'm going to tell you guys how to use this particular market structure to enter into trade. It is very, very simple. I want to know if you guys have observed in an uptrend, right? We our price create an higher high, then higher low, then higher high, higher low, and higher high. If you observe, you observe that price always come back to this previous high. You get price always trace to our previous high before going upward again, which means that previous high as kind of a demand zone or support zone for prices to come. You get so which simply means that if price is going up or one enter, we see that it is an uptrend. You get price basis of higher highs and higher low. You get and if we want to enter into the market or into the trade, we should wait for price to traces back to our previous high. You get around this particular place, so we should be looking for our entry where we can buy it again because we are very certain because we are very sure that when price come to this particular place, price really retrace to our previous high. You get and one price retraced around this figure, we can enter into the trade. You get. Let me show you an example on the chart so that you guys should understand. So you guys can understand better. Sorry about that. On this place, right? On this place, let's start from here. On this high, price create a low. On that high, on that low, on that high, on that low. If we mark out the previous high out for this particular trade, you can see that this is actually our previous high, right? And as you can see, price retraces back into this particular place before going up. You observe that at this particular place, price did what? Price tends to retrace back to this previous high before going up again. The previous high always acts as what? As a good support for markets or for price to react to before going upward. So if you're using the market structure and previous highs or previous low, if you see a a key zone at that place, that might be an entry zone for you to enter. So on the chart, right, you can see at this particular place, there was an There was kind of an order block and a fair value gap at this place. You can see this, there was an order block at this particular place. You can see that this particular price tap into before going upward. So you can use market structure and what SMC to trade. You know what you are doing. So as you can see, there was a break of to the upside at this particular place. Break to the upside. And then see price it was to be traces back into this particular previous high. And once price touch tap into this and price and started going upward again. So for you now, if you want to enter into this particular trade again, you can probably look for entry around this particular zone, wait for price to trace it around this particular zone. You get, and once price reaches back to this space, if you find a good entry, you can enter into the particular trade. So guys, this is our market structure is, and this how you can use market structure. Use the was helpful. So let me know that in the comment section. If there's anything you don't like, let me know that in the comment section. Remember to like, subscribe on the bell icon. Join my Telegram and WhatsApp community. I'll see my next video. Peace out.